Hello everyone, welcome back to another video. Today we're going to be covering what exactly is a stock quote and how do we read one in this lesson, Unit 1, Lesson 8. So without further ado, let's just go ahead and get into this. So what does a stock quote actually tell you? They tell you four different things. Price, where did the most recent trade happen? Direction, is the stock up or down compared to yesterday? Activity, how much trading is actually happening or volume? And finally, four, context. Where is the stock compared with earlier today, over the past years, or over different time horizons? You don't have to memorize 20 different numbers at once, okay? It's all right there for you. You just have to understand what they mean. And once you're doing that, these stock quotes will be much easier to read and much more helpful and insightful for you when picking stocks to buy, invest, whatever. So let's look at the last price bid and ask. We covered this bid a little bit a few lessons ago, but we're going to cover it again. The last price is simply the last most recent trade. So for this example, the last trade happened at $102 and $2. Then we have the bid and ask, which we covered earlier. The bid is $101.98 right here. This is the highest price a buyer is currently offering. Then we have the ask, which is $102.02. This is the lowest price a seller is currently asking for. So all these numbers are pretty close, as you can see here, only 2 and 4 cents off. But they're not interchangeable. This is the last price that happened. This is what someone is wanting to buy for. This is what someone's wanting to sell for. That's it. It's a very important distinction. What happened and where people are currently willing to trade at. Next slide. Change in percent change. How much is the stock up or down today? That's what this basically answers. The most important thing to remember is that daily change is normally measured from the previous close. So if you don't know, the market opens at 9:30 a.m. and closes at 4 p.m. Now you would think that daily change would be measured from 9:30 a.m., but it actually isn't. It's measured from the 4 p.m. of the previous day. It's not measured from today's opening. It's measured from the previous day's close. So suppose the stock finished yesterday at $100, and it is now trading at $102. Dollar change is very easy, right? You can do some simple math and you get plus $2 or plus 2%. So the stock would have been up $2 or 2%. Percent change is usually more useful when comparing different stocks because different stocks have different share prices, right? A $5 move on a $50 stock is a lot bigger than a $5 move on a $500 stock, right? The percentages differ. Now we can talk about open and days range. The open is simply the price of the first trade, okay? In this example, the open is $101.20. Then we have the day's low and the day's high. The lowest price traded today was $99.50 and the highest was $103. So every trade so far today happened somewhere in this range. The lowest trade, the highest trade. This gives you a quick sense of how much the stock has moved during the session. If the low and high are extremely close together, the stock has not moved them out very much. If there's a large gap between them, the stock has experienced a wider range of prices during the day. Again, this does not automatically tell you whether the stock is good or bad. It is just useful context for you to understand. Now we can talk about the 52-week range. The 52-week range basically works the same way, except we range out from 1 day to a whole year. In this example, the stock traded as low as $70 in 52 weeks and as high as $120. It is right now trading at $115. So we can immediately see that the stock is trading relatively close to its high for the year. But be careful with how you interpret that, however, though, because being close to a 52-week high does not automatically mean a stock is too expensive or about to fall. And being close does not automatically make it a bargain, okay? This is a very key idea. I'm not sure if you already understand it by now. But basically, what happened in the past does not mean it's going to happen in the future, okay? Just because the stock is higher, is increasing, does not mean it's going to keep increasing. It can go down, it can go straight, it can go anywhere. Doesn't matter. You cannot determine the stock's price based off its past move. It's just not possible. It's random. These are efficient markets we're talking about here. So, a stock can continue making new highs. It can continue making new lows. This range just gives you some context about where the stock is. It does not tell you what happens next. Now let's talk about volume. So volume tells you how many shares have been traded so far today. So if the volume is 5,200,000, that means 5.2 million shares have changed hands during today's session. Volume is basically a measure of activity. If a stock suddenly moves 10% and barely anyone is trading it, that is very different from a situation from a stock moving 10% with enormous amounts of volume coming in. Volume can also give you an idea of liquidity. Stocks that trade huge numbers of shares are generally easier to enter and exit than stocks that barely trade. But you have to compare volume with what is normal for that specific stock. 5 million shares could be enormous for one company and completely normal for another. Now we can look at some other things you might see in a stock quote. You can see market cap. Market cap is the share price multiplied by the number of shares outstanding. it gives you the total market value of the company's equity. Then you could see PE ratio. PE compares the stock price with the company's earnings per share. We're going to cover that a lot more later on. Just right now you understand that it just compares the stock's price with the company's earnings. Gives you a rough idea of valuation. Then we have dividend yield. That tells you the company's yearly dividend compared with its share price. Not every company pays dividends, so some stocks might not have a dividend yield at all. For now, you just have to understand where these numbers are coming from and what they are referring to. Next, we can look at share price does not mean company size. This is one of the biggest beginner mistakes in investing. The price of one share does not tell you how large a company is. Look at these two examples. Company A has a share price of $800 and 10 million shares. Market cap is $8 billion, right? This times this equals this. Then we have Company B. Share price of $5, market, which seems a lot cheaper, but it has 5 billion shares. That gives a market cap of $25 billion. So clearly Company B is way larger than Company A, even though its share price is smaller. So the key idea is that there's two parts to evaluation or company size. There's the share price and the number of shares. Okay, that's why share price does not determine how large a company is. Okay, just because I have a very expensive share price does not mean my company is large. Next slide. So you can try it on Google. You can just look it up. Look up Apple stock, and you can follow these directions. It should be all right there for you. If you look up the ticker, and by the way, the ticker is basically an acronym for a stock. So, like for example, AAPL means Apple. You don't have to fully understand that. You can just look up Apple stock too. There's no difference, and you can figure out some of this information. So let's go ahead and look at the big takeaways now. So the last price tells you where the most recent trade has happened. The change to percent change tell you how far the stock has moved from the previous day's close. The day's range tells you the low and high prices today. The 52-week range gives you a longer term price context, right? A year of context. Volume tells you how much trading activity is happening. And market cap tells you the size of the company by market value. And most importantly, do not just focus on just one number, okay? There's a stock quote is a dashboard. It's a bunch of numbers, okay? The price itself just tells you very little information. You have to look at all these different earnings, all these different numbers. And then from there, you can form a thesis on how the company is doing, their financial health, what the company is, how strong they are, etc. So, I hope you enjoyed this lesson, and I'll see you in the next one. Bye-bye.